That was a warning. Okay, and so I got to have $500,000 producing 10%, $50,000, so I can have that after tax $50,000. It was my goal. So I've been goal oriented, and so once the Roth IRAs were allowed, I began in 1998 with my Roth IRA, and I've invested it primarily for growth. One of the things I could have invested in, and I got to say, looking back, the people who I know, the friends I have who have invested in real estate in the Roth IRA, have done extremely well. But because I didn't want the liability in my IRA or in my pension plan of a property that was held for rental, I chose not to do that. As I said, those people who I know who have used the Roth to actually hold real estate over the last almost 20 years have done extraordinarily well. But my choice was to have notes and mortgages and options, which I also secured by mortgages. But the option gave the right, but not the obligation, to own property. Now I'm talking about options to buy real estate. You can certainly have options to buy all kinds of other assets, goods, and services, and the most common options are options in the commodities market, where businesses buy options to control those commodities and assets they're going to need in the future, but they don't want to store. So in any case, the properties that I look at feature the following benefits. One is income. Next is net worth building. The next is enjoyment. And finally, the ability to be secured. And so looking at those things, those were things I wanted to have in my retirement account as well as in my own investment life. So the cash flow component is either buy, sell, and make a profit, or income, being annuities. Buy, sell is, of course, a business, and I really did not want, I chose not to have business activities in my IRA because I did not want to file a 990T and pay taxes on the income in my IRA. So primarily I've been an investor.
Yes, options, and sorry, just to touch real quick on that. For anyone that's curious, 990T is a very infrequent type of filing that people that are invested in businesses specifically within an IRA have the potential to have to file. So in the normal course of IRA investing, such as what we're going to get into with options, that doesn't always apply. Just so you know, sometimes when people hear that, they can get a little shaken when it comes to tax-deferred and tax-exempt investing. So I always like to make sure that when that gets thrown out there, since it is a little obscure, that people have a little information on it. But do continue, Pete.
Okay. So, for example, if I'm doing an activity that if I did it personally outside of the IRA, I would have to file a Schedule C for that tax return. That's a business tax return. So my personal feeling is if it would result in Schedule C filing, if I did it personally, then that would be business, and therefore I should file a 990T. If it's an investment, meaning something that's being held for the purpose of generating long-term capital gain or rental income or interest income as an investment, that's what does not require the 990T. So that's primarily what I've invested in. So my IRA has been invested almost entirely in notes, usually secured by mortgages, often wraparound notes, which allow me to acquire and control amortization and enhance my yield and be more secure in the event that I'm in second position, and options. The option is the right to buy real estate, but not the obligation. The person holding a right to own land, and for our purposes now, land meaning real estate, so land and the improvements, has no title right, no title interest, but only the right to acquire it. So that allows me leverage inside my IRA without debt. and for that matter, leverage outside my IRA without debt. And the debt component and the management component of real estate is what limits a person's ability to take on too much. Limits it. If you got too much debt, the cash flow gets aggravating, and the management gets aggravating either to you or to your spouse. Somebody gets fed up with that. So the pure option, the right to buy it, is something that I like. Now, many people talk to me about options as though they're very obscure, and I don't go out hunting for options. I go out hunting for people with an uncomfortable circumstance and see if I can help them. Now, the discussion that comes about where people talk about how obscure it is generally is just they're not perceiving what is actually going on. When I say to a person, have you ever bought a piece of property? And they say yes. And I say, well, was there any contingency in your contract? Was there contingent upon inspection? Contingent upon financing? And usually they say, oh, yeah, sure, I had that in my contract. Well, that simply means the seller has agreed to sell, but you as the buyer have the option to do that inspection, and should you choose, you cannot buy. You have the right to buy, but not the obligation. And it's as simple as looking at it that way. Now, because I'm looking at the options as an investment, hoping to hold the property, control the property for a long period of time, my options are an investment. I do not buy them for my IRA. I do not buy them and contribute them to the IRA. I direct, for example, Advanta to invest, to cause my IRA to invest in that option. So then my IRA has bought the option. Outside of it, that my family trust might buy the option to control property for my family, for my estate. Now, someday I may or may not actually execute on that option and close it. I've done literally 130 or 140 options in my career in real estate, and I have only closed a half a dozen of them. What typically happens in the options, and the options I have in my IRA are generally 10 years or longer of term. Sometime during that period of time, someone comes along and says, I'd like to buy the option. And I may or may not, my IRA may or may not choose to sell it. Other times, people come and say, I've decided to keep the property. What can I do to get you to terminate the option? So sometimes we get paid to terminate the option and make our profit without ever executing. Other times, we actually close on the option. Now, outside the IRA, that comes up when someone comes along and wants to buy one of our rental houses. And we don't want to sell the rental house and just pay taxes. But if we got a house we like better, we might like to do an exchange and let someone else take the sale proceeds. And having an option on a house or two, or having a lease option where I get to test drive and rent the property and manage the property to see if I liked it, enables me to very easily close that exchange and let the third party take the sale. And so the options are very useful for that for me.
Exactly, and that's a great caveat you're bringing up is about the intertwined nature of options in this instance and real estate. Mike asked a good question that I'd like to bring up. What if there's a lien on the property that may occur during the period of the option? Pete, if you can touch on that, that'd be great.
Okay. Well, first of all, let's talk about securing the option. And I think exactly. First you got to realize the option, like all investments, is first and foremost secured by the rapport you establish with the people you deal with. People like you. That's why they do a good deal. You like them. You understand what's going on, and they understand what's going on. So they want to do what you've agreed to do. Then after you've had that rapport and you know you're dealing with people you like and who like you, the next thing is competent and trustworthy people. If I'm not competent, we may write up great paperwork and we may still mess it up. If I'm not trustworthy, but I'm real competent, that's even worse. So the rapport, the people part of this is so very important. The rapport, trustworthiness, and competence comes first. Next, especially with a longer-term investment option, you're holding it in the hopes of significant appreciation. You need to record that option. Now, the issue with the recording is you're recording a document that's documenting your right, but it's not a title interest, and therefore, in the chain of title, it may well not be respected. And I'm not talking about that from just a theoretical standpoint. I've had an option, which, though recorded, was ignored and the property was sold, and my option received no consideration whatsoever, and the property was sold to someone else. Since that happened to me, I record I cause to be recorded a mortgage to secure the option, because mortgages secure promises. Now, the ordinary promise you hear is I promise to pay, the mortgage secures a note. But a mortgage or a deed of trust can be used as security for any kind of a promise that was made. So in this case, the owner of the property has promised that they will sell me the property if I perform certain things. I come in with so much money within such a period of time. That option is recorded, and then a mortgage is recorded as security. That mortgage does take a position. It is an interest in property. It is not ignored in title searches and in closings. And so while I've had options that were not secured, respected, and closed accordingly, I have also had that one which was not. And so with the mortgages in the public record, the mortgage takes precedence, takes a position. You've heard the race to the courthouse. Once I'm there at the courthouse, liens that come afterwards are subject to that option. Now, the issue is there's no question it is unusual, so you're going to find a difficult time in explaining it to people. But I will tell you, I have done many of these, as I said, and I've never had an issue. What typically happens is I get a call from a title company, or I get a letter from a title company, or Sue Ann Lewis, who does most of my closings, gets a wire or an email or a fax from a title company saying, what's the payoff on that note? And we have to explain, no, it's not a note, it is an option. And with it, if it's my IRA, my response at all times is we, the IRA, acquired that option in anticipation of significant appreciation. We do not want to sell it. What we will do is we will allow you to take title subject to it, and we'll continue to hold it for appreciation in the future. Now, needless to say, most people who want to buy the house and have it for their family are not happy with that response. In the event that they come back and make another offer or continue to pursue it and offer us so much profit or something we like better, then we will happily make a deal. But our original response to any offer is no, we're holding it for appreciation. And what I'm trying to do there is document that this is an investment. It's not a flip. It's not a business. It is an investment that we're holding long term. Now, that said, sometimes people come back and they don't have money, but they've got property. We might very well trade the option for an income stream, especially now, I'm 69 years old now, and I'd still rather have my IRAs growing for my kids and grandkids, but you get to the point where you say, well, I really could use some income. There are people actually in my family who like to eat. And so we have traded options for notes and mortgages. A recent example of that is we had an option that we acquired back in '98 that someone just offered us a $100,000 mortgage for the option, which would pay $750 a month at 6% until paid. Well, $750 a month coming in our IRA or outside the IRA is a choice we have now. Do we want to continue to hold the option to grow, or would we like to convert it to income and interest and yield? That note, had we accepted it, could have been secured by a mortgage on the same property or by a mortgage on some other property, as long as it was something that made us feel secure. But the security issue comes up at all times, because if people don't trust you, they don't know, if they don't believe they're going to get what you promised, they won't do business with you.
And that's a great point to bring up, Pete, is the aspects of security. It's not just inherent in the tangible asset of it. There's many different aspects of it. But just to kind of recap that very interesting point you bring up of carrying that subject to option along with the property. So one person owns it that you have the option with, and then when they go to sell it, you can actually carry that on for appreciable value. Just to kind of recap that point in case anyone was getting a little lost in that. But that's a very good point to bring up.
Yep.
So with that, so we've kind of covered in the beginning, and Mike, thank you very much for that question. It really kind of brought up a lot of great points. So with that said, we've kind of covered IRAs and individuals, and you mentioned, a personal trust. Are there any restrictions on who can buy options?
There's no restrictions that I'm aware of. Any entity or any person who wants to invest in the future of some assets or goods and services or the right to buy something later, as long as they're legitimate to contract, they're not incompetent, not 6 years old, I see no reason that the contract wouldn't be honored and,
sure.
and might not be enforceable. Now, I will say I'm not in the business of enforcing anything, so I'm going to move on, realizing that when I do a deal, the significant thing I do in that deal is establish a relationship. And if the deal goes wrong, number one, it's my fault. And number two, that's going to mean business is going to be driven from me as the person says, I really had a lousy experience with Pete Fortunato. That's a bad thing. I'm looking at every single deal I do to create a good deal, not only for that deal's sake, but for the sake of the future. I'm telling people all the time, every single deal you do is a seed from which things will grow. I have a story I tell all the time about a gentleman named John Pochask, who I did business with when I was in college. And when he passed away, he and I had done 27 transactions, and I've done 4 more transactions with his family. So having a deal be a great deal for everybody enables you to build that future much better, much easier.
Certainly. And we have a great question from Shelley over here that was just typed in, and it kind of goes in with question number 4, is where do you find options? And kind of rolled in that what are the costs associated with that? I know that's a little bit open-ended, Pete, but and also kind of get, are there any sort of blanket costs associated with it, and what do people need to watch out for when looking for these types of investments?
All right, well, first of all, you don't find options. It's just like everything else. You don't find deals. You find opportunities. I mean, opportunities are born of someone's uncomfortable circumstances. But I'll give you an example of a story of a deal, a Clearwater deal. I was referred to a real estate agent. Again, referral, back to that seed. Every deal is a seed. I was referred to the agent. I did not know the agent. I went and met her client, who was a lady who wanted to sell a property. When I went in to the house to meet with the lady, I said to her, why would you sell a nice house like this? Now, what I'm doing there is I'm trying to discover what's the uncomfortable circumstance that's causing her to suddenly be interested in selling this house. Because something's changed in her life, otherwise they'd stay in the house. Well, I went there fully expecting and hoping to be able to buy that house. But when I asked that question, she started to cry. Her husband had passed away suddenly. I mean, late 40s, so a young man. And when he had passed away, he left her and her daughter with a house they'd owned for 12 years that they couldn't afford. And so I said to her, well, if you sell the house, where are you going to go? And she said, well, I'd like to stay in the area because my daughter, this has been where she's lived since she was 5 years old, but we've got to get a less expensive house. And so I asked her, how much less expensive? She said, we've got to get our payments down to $700 a month. And she was paying $1,000 a month, principal, interest, taxes, and insurance on the house she owned. So when I discovered that that was the situation, I said, could you show me your budget? And recognize now she has told me the problem is not the house, the problem is $300 a month. So in looking through her stuff with her, I found that she had a mortgage on her, a car loan on her car that was under $5,000 and that cost her $350 a month to make the payments on. And so what I did is I bought an option to buy the house from her, and I paid her $5,000 for that option. Now recognize how important the people are in this deal. If I bought that option, gave her $5,000, she paid the car off, which lowered her payments per month by $350 a month, and then I exercised my option the next day and take her house away, I haven't done her any good. So the option was written where I had the right to buy it after 5 years and not before, thereby allowing her to stay in that home until her daughter was finished with school. And so those are the things that you don't find that. You care enough to discover people with an uncomfortable circumstance and to build that. We're looking at a house right now where the people want to move in a year out to the West Coast, and they want to sell the house and lease it back for a year until they move. And that house needs a roof. And so the offer that we're planning to make to them, and we've got an appointment to sit down with them, is we will give you the cash to put a new roof on the house in return for an option to buy the house in a year. But see, that enables us to control that house without any debt, without any debt service, without any management. And we have tied it up. We have leveraged it with, let's say, $8,000 down for a roof without having to borrow any money, without having any payments, without having any management. And in the event that the market goes up, we might exercise our option. Our plan is to exercise that option to buy that house. Relatively short-term deal. But we like the house and we own the house next door, and so it works for us. But in every case, it's a personal deal that's structured based upon the people you're dealing with. Now, that's why if you go out and look at MLS, you're not going to find options. You don't find opportunities to option property in MLS because the people that are in MLS want to get rid of their house. The option is something that is for people who want to keep there and they want to use it. The widow I talked about, these people who want to stay for a year, those are the people who will give you an option in return for some benefit to them. And so that's real important. Now, when I'm dealing with someone who's been transferred or they've inherited a house, the occupancy and possession of the house is a burden, not a benefit to them. Well, then I might either do a short-term option where I say, look, I'll give you $1,000 right now for the right to buy it in 6 months. And I would just try to flip it. Essentially, I'd be like a listing agent, except that instead of just pretending I knew how to sell it, I'd be betting $1,000 that I could sell it. That's not something I do very much because buying and selling like that is a taxable event. I'm allergic to that. The other thing I do, if it's long-term, if the people want to get rid of the house and the occupancy and possession is a burden to them, then I add a lease to the option And by leasing it, I take the house away from them, and I pay the electric, and I pay the water, and I pay the sewer, and I give them the income and rent to pay the taxes and the insurance. And my tenant mows the lawn. And so that's something that I would do with a seller that I would not do with someone who wanted to use the property, because they desire different and they require different benefits. The lease
Certainly.
option I would not do with an IRA. The pure option I'd be delighted to do with an IRA.
Okay, Pete, that's a great point you make. I'm just going to bring up the last slide here, and there's one more question we'll get to from Steve that has to do with a previous point you made. But if anyone is interested in attending Pete's class next weekend, here's the information for it. Here's what will be covered in depth, as you kind of get a brief taste of today in this short webinar of exactly what's covered, and the variety and the true depth of knowledge that you can gain from this kind of stuff. So here's all the information for that. And the question from Steve goes, in the case of the real estate agent where you paid $5,000 for the option, did the agent have to postpone her commission?
I'm sure she did. We didn't buy the property, and that deal I told you about was done in 2005. So does anybody remember 2005? What were prices doing? They were going up like crazy. In 2006, I looked like a genius. In 2007, I still look pretty good. But in 2008, the value of that house fell to below the price that I was going to buy it at. And it was still going down. So in 2010, when the 5 years was up, the value of the house was substantially less than my option price. So in that case, I was left, number one, with walking away and not getting anything, or number two, talk to the lady again and say, listen, I'd like to extend it. I'll give you some more money. And so that's what I did. I went to her. I said, look, I'll give you some more money. I'd like to extend it. And she said, oh, I don't want to extend it. So in that instance, I bought an option, held the property 5 years, and it happened to be the wrong 5 years, and lost the $5,000 in doing that deal. Now, picture the difference if I'd have bought the house for $140,000 with $5,000 down and had a mortgage. Now suddenly, 5 years later, it's worth $90,000. See, I limited my risk by using the option. And so a loss, a bad deal in a bad period of time, my loss was limited to the option amount. Now, I will say in most cases, because I've been able to negotiate extensions, I've been able to keep the option good and outstanding until there was a profit realized. And many times I've just kept them. I've got a couple of 20-year-old options now. But be aware of the fact that the option cuts both ways. You can lose with leverage, but it so limits the loss that you're much better off, in my opinion.
Okay, great. Well, that's kind of running up on the end of our time here today. I want to respect everyone's time that came in and participated with us today. Again, thank you very much, Pete, for joining us and putting out such great information. Again, if anyone's interested in attending, here's all the information. I can forward the registration via email if you would like. And then also, so you have my contact information, here's my information as well. I think we got to all the questions. And was there anything that you'd like to add in summation, Pete?
Nope, I have a good time in the real estate business. You just need to remember that it's all about the people. When I talk to people and I make a proposal, which I always do because I'm never short of my opinion, I tell people exactly what I think, and I listen and I care. When I say, will you do this? And they say no. If I do that on a computer, I have no more information. But when I do that face-to-face, there's a difference between them saying no and laughing at me, saying no angry, saying no crying. And that information comes from getting face-to-face with people. And you're far better off and you have far better chance of establishing that rapport if you get away from the damn computer and go talk to people face-to-face.
Well, I think that's a very appropriate point to end on, Pete. Thank you for your candor and appreciate that. And if there's anything else that anyone to participate here, I'll leave the meeting open for a few moments. Type in a few questions, and we can certainly get those answered on our side. But again, Pete, thanks for joining us, and I'll leave this open for about another about another 10 minutes for anyone that needs to type in anything, but feel free to leave. And thank you for joining us today.
Thank you very much, Alex.
Thanks, Pete.